Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, March 26, 2021. Happy Friday, everyone. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. In the previous session, we did see a sharp turnaround from the morning lows, whereby price closed back above the previous session's low and the previous session's midpoint. That's a really strong low, a really solid, thrusting bar here that suggests the next, 3 to 5 days, maybe up to 2 weeks, could be higher. Now, the one thing that would fail or break this pattern right now is kind of what's happening at the moment, where we're seeing a failed high develop and the potential for a drop back below 3,900, which could take us back to the 3870 level, the previous session's midpoint. That previous session's midpoint, if there's any failure to hold that level, which is 3876 half, that could open up new lows and we could see another round of weakness. The one thing about this strong low is that it has formed after a moderate or more modest pullback that it's seen over the last few rotations, and these last rotations here, again, increasing in the depth of their move here, and so we haven't really seen that type of move this time around. So again, while this short-term strong low right now looks solid here, keep an eye on the previous session's high. Bulls need to continue to keep it above the previous session's midpoint to keep this thing going higher here toward 4K. If we take a look here at the NQ, similar price action, but already a broader failure happening of the previous session's reversal tail. You have this strong low that developed yesterday, not as strong as the ES or the YM or especially even RTY, the Russell 2000, but it was a decent low off of a key zone that it needed to show strength off of. So it was not bad. The one thing that's happened here already this morning, pre-market here at around the London Open, we saw a rejection of the previous session's high, and we've seen a deep pullback here already this morning. Very bearish price action across time frames, and price is now below the previous session's midpoint, which opens the door to a retest of the low. So right now, this could be a failure to turn higher off of these lows with a failed new high and a push through the previous session's mid. We may ultimately see a bearish outside day develop in the NQ, especially if it can't stay above the previous month's low price here. All right, let's take a look here at crude oil. Crude oil has had quite a bit of back and forth price action here. Sharp down day, sharp up day, a sharp down day, and now today another bounce day, but inside the range. So we've remained inside the range here for several days in a row, with the range getting slightly smaller as this thing builds out. Overall, this market right here is building a range here over the last several days that could open up the next big key move ahead. This has been the widest pullback we've seen so far out of crude oil since this rally began here in November, and ever since we've hit the top end of that market structure, it's basically turned down hard. So right now, based off of the market structure that's developed here, any bounce could now begin to be seen as a selling opportunity as price works its way back toward value after hitting a market structure edge. So that'd be 52.84. So again, even if we were to rally here, watching for signs of potential rejection, that could push this thing down. Overall, we continue to see range-bound action, and we are kind of at the upper middle portion of the range right now. So any reaction will likely be seen somewhere in the 61 zone, perhaps as high as 62. And same thing for the downside, between 57 and 58 could provide some intermediate reactions to those edges. All right, that is it for crude oil here. Let's take a look at gold futures. Now, gold here is in a very narrow range. This range has continued to develop over the last 10 sessions now, depending on how you want to mark it here. Just on a 9-day basis, we're compressed at 58% of average range, with a potential move of 77 to 100 points coming up ahead. If we were to increase this to 10 days, right there, we get 82.5 points as the potential target here. 53% of average right here. Average is 66 points on a 10-day range basis. Right now at 37.6 points inside this range. Again, given the overall trend of this market, which has been down since the first week of the year, you have a failed new high yesterday inside of a range here. Any failure to hold 1720, 1715 especially could open up a new round of selling pressure within this downward sloping channel. That momentum there to the downside could open up again about 82.5 handles and up to maybe 100 handles of movement. So if we fail at 1720, that could open up a move down into 1640 or even into 1620. If you look right here, this is our primary target zone from this recent turndown. You'll see that this is 1620 to 1650 as the target zone. That would be based on the 10-month average. So again, that's right in line with what we're seeing at the moment. Breakdown through 1720, you get about 80 handles into 1640, and that's right at the top edge of this range. If this thing gets 100 handles of movement, 1620 would be the next target, and it's right at the top, at the bottom of that range. So we're right in line with average daily range as well, and with the amount of energy that's built up in this range. So we're looking for a likely continuation lower, unless this thing can get back above 1760 with some juice. All right, that is it for now. We'll see how this plays out heading into the rest of this session. Happy Friday. Have a great weekend. Please be sure to like, share, and subscribe. And I will see you in the trading room. Take care.